Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what is really going on behind the scenes. Today we're diving deep into Siddhi Acquisition Corp's latest financial report, and let's just say it is going to be an interesting ride, especially when we look at how much money they're playing with and where it is all going. So, what exactly is Siddhi Acquisition Corp? Think of them as a company that is basically looking to buy another company, a kind of corporate matchmaker. As of the 30th of September 2025, they had a sizable pile of cash, over $759,000 in cash, but that is just pocket change compared to the big money sitting in their trust account. We're talking about over $283 million right there. That money is set aside specifically to help them find and acquire a business. Now, let's peek at their balance sheet as of the 30th of September 2025. What is most striking is the huge amount in their investments held in trust account. This is the core of their strategy, over $283 million earmarked for that future business deal. On the other side, their total liabilities are around $16 million, which might seem high at first glance, but when you compare it to that massive trust account, it puts things in perspective. They also have this interesting item called Class A ordinary shares subject to possible redemption, also a very large number, over $283 million. This means that in certain situations, these shares can be bought back by the company, which is pretty common for these types of acquisition companies. When we look at their operations over the 9 months ending the 30th of September 2025, it is clear they aren't exactly running a business in the traditional sense. They had revenue, but it wasn't from selling goods or services. Nope, it was mainly interest earned on the money they have parked in their trust account, a cool $5.8 million. However, they also had operating costs about $8.6 million. This led to a net loss of over $2.8 million for that 9-month period. It is a bit like earning interest on your savings account, but spending more on keeping that account open. For the 3 months ending the 30th of September 2025, they actually reported a net income of almost $2.8 million. This was thanks to a surge in interest income to nearly $3 million, while their operating costs were only about $154,000 for that quarter. So while they are spending money on running the company, their main income stream is from the interest on their reserve cash. Let's talk about the shares. They have Class A and Class B ordinary shares. As of the 30th of September 2025, they had a little over 338,000 Class A shares issued and outstanding, but remember, a huge chunk of these, over 27 million, are subject to redemption. The Class B shares are mostly held by the sponsor, Siddhi Sponsor LLC, and there are about $6.9 million of those. The Class B shares have some special voting rights, which is important for control. Now, looking at the liabilities, they have quite a bit of advisory fee payable and deferred underwriting fee payable, both at $8.28 million each as of the 30th of September 2025. These are fees tied to their initial public offering and the potential business combination. They're essentially future payments they've committed to, which is a significant chunk of their current liabilities. In their cash flow statement for the 9 months ending the 30th of September 2025, we see they used over $509,000 in operating activities. This makes sense because they are spending money on operations while waiting to finalize a business combination. They also invested a huge amount, over $277 million, into their trust account, which shows their commitment to saving that money for the main event. Their financing activities brought in a lot of money, over $278 million, mostly from selling their units in the IPO. As for how they manage their investments, especially that big pile in the trust account, they're playing it safe. As of the 30th of September 2025, those over $283 million were invested in US Treasury bills. This is a very conservative approach, aiming to preserve capital while they search for a business to acquire. Any interest they make from these investments can be used to pay taxes, which is smart planning. They also have some ongoing costs, like a monthly fee of $15,000 for administrative support services from Siddhi Capital Holdings. Over the 9 months ending September 2025, this added up to $90,000, with $60,000 of it still owed. It's a regular expense that keeps the lights on while they work on their main goal. Let's talk about those Class B shares again. They are the ones that give the holders more control, and they were issued to the sponsor Siddhi Sponsor LLC. They've gone through a few changes in number, but as of the 30th of September 2025, there were $6.9 million Class B shares outstanding. These shares are designed to convert into Class A shares once they complete a business combination, and the terms of this conversion are pretty detailed, aiming to make sure the initial investors get a certain ownership percentage. Now, for the money upfront from their big IPO, they paid a cash underwriting fee of $250,000 to Santander US Capital Markets. But the really big fee is that deferred underwriting discount of $0.3 per unit, which adds up to a massive $8.28 million. This money won't be paid out until they actually complete their business combination. It is a way to align the underwriter's success with the company's success. And finally, the report includes all the necessary certifications from their top executives, their CEO Sam Potter and CFO Mike Rollins, confirming that the financial information is accurate. It also includes all the technical XBRL documents that help computers read and understand this financial data. So, what is the big picture here? Siddhi Acquisition Corp is essentially a holding company with a significant amount of money set aside, waiting to make a big acquisition. Their operations are minimal, focused on finding that perfect target business. The interest income from their trust account is their current revenue, but it is overshadowed by operating expenses. The large amounts payable for advisory and underwriting fees highlight the costs associated with going public and preparing for a merger. They're in a race against time to find a suitable business combination within their completion window, and the success of this venture hinges entirely on that future deal. Their conservative investment strategy in US Treasury bills is sensible for preserving capital, but it also means they are not generating significant returns. The Class B shares give the sponsor considerable control, which is a key factor in their decision-making process. It is a classic SPAC story, a company with cash looking for opportunity. The real story here will be written in the coming months as they hopefully find that business to combine with. Alright, that is our breakdown of Siddhi Acquisition Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Are they well positioned to find a great business, or are the costs and timelines a bit too much? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community discussions. Thanks for watching. See you next time.